Alrighty, but yeah, what were you about to say?
No, no, go ahead. I just
Oh, okay.
heard.
Oh, okay. You good? Yeah. So, yeah, last week was a bit tricky. So like Monday was really good. Had a very good trade. On Monday, very clean. Probably one of my easier, more straightforward positions that I've taken over the past few weeks. Where we're
Mm.
just looking to see a low get taken. Once a low got taken, um, on the 15 and 5 minute time frames. Well, initially I was looking to see a 1 hour imbalance get filled. So if you look here, this 1 hour imbalance, I was looking to see it get filled. Once that happened, I was open to like seeing internal structure. So when I say internal structure, I'm talking about like a low get created and then it gets taken out in that same like session. And then I
Mm.
would be able to get possibly a type B or a type C setup, whereas a type B is my favorite setup. But
What
um,
is that? What is Type B, Type C?
okay,
I've never heard that.
yeah. So basically, I just call them that for my own reference. So like, I'll go back to like the beginning. So when I was trading, like basically forex, I was trading gold for like a year
Mm.
straight. Um, like from like May 2023 to like May 2024, basically.
Mm.
And I was basically trading just supply and demand. Bro, when I say the market
Uh,
conditions were perfect, bro, like this was like you see my screen, right?
yeah.
Yeah, so bro, this was all I did was trade off of the 1 hour time frame. And I was
Damn.
going crazy. Like when I say it was so easy, bro, I had like at least a 60-70% win rate and I was hitting my average risk reward was a 1 to 4.
Damn.
And but that was only because of market conditions. Like market conditions were great last year. Like Q4 last year. Like end of
Mm.
Q3, beginning of Q4 last year. That was like those like the best market conditions. So this is my type A setup where just look for a break to the upside, right? With a
Mm.
continuation, right? Price to pull back into the order block or the supply or demand zone in this case.
Mm.
And then I literally would have limit orders set. So just a limit order set here. Price would tag me in, and then as you can see, it did whatever it did. And this was everything. Like this is the only picture I needed to show, just to keep myself grounded because this is all there was to my trading setup.
Mm.
Um, Now I would look at internal structure, like you see all this within here. Would want to see this stuff get broken, and there were opportunities to kind of stack entries, but I didn't really get into that much.
Mm.
The reason I don't trade this anymore, I still have it up here just to remember, and if people ask,
Mm.
it's just because market conditions changed, where the market was not moving like that in January. So the market started moving a lot more choppy in January, and this is kind of where the Type B setup came in. It's very much ICT concepts based. But the thing is, I've never watched the ICT concept video. I've watched
Yeah.
Justin Worley.
Mm.
I've watched his videos, and he trades ICT concepts. And basically, just from watching his videos, like his breakdowns, his live trading sessions, and stuff like that, I've just like I started seeing the patterns myself. So maybe from I was trading gold this year from like January to like May, so like
Mm.
around a year straight from last May to this May of trading gold, and it just was not working for me. Like price was very choppy compared to last year. I was not getting consistent moves, and then a lot of the time, like the market was very, it wasn't as consistent as it is with NQ and ES. Now, like we don't get
Yeah.
a move every day, but we need volatility on the lower time frame to be able to get into like high reward moves. So, like with gold, the best I could get was like a 1 to 1
Mm.
from my perspective, from the way I was trading. But then I'm looking over at Nasdaq and I'm seeing things, and I'm seeing potential to maybe get a 1 to 2, 1 to 3, 1 to 4 trade, right? And so started looking at indexes only around the end of May, beginning of June, like June 1st, really, and started tracking my progress trading a demo account. And this is where the Type B setup came in. So I wait for. I mean, you can see like these are all the steps here. Then I just have screenshots. So this is the 1 hour time frame. I look for like ideally I like 1 hour highs and lows to get swept, but anything
Yeah.
so 4 hour, 1 hour, 15 minute, 5 minute lows or highs to get swept, but not fully broken through. So when I say fully broken through, that means the candle breaks through it and the following candle is continuing in that direction.
Yeah. Yeah.
So I look to see that low get swept or that high to get swept, that whatever that level to get swept. And then I look for structure like support and resistance to be created on the 5 or the 1 minute time frame. And then I want a break of structure, let's say to the opposite side. So if we're looking to go long, I want a low to get swept, price to build structure right around the low, and then a break of structure to the upside on the 5 or 1 minute time frames with an imbalance. And then once price rebalances, meaning going back into the imbalance, then I'm going to take the long in this case
Mm.
because we're talking about going long. Now, this is just an example. Um, Gosh, okay. The low got swept on the other. You saw on like the other screenshots. Look for structure to
Yeah.
get built. Was waiting for. So we have this minor high, minor within the same candle. Price breaks to the upside, imbalance here. Um, and then I wait for price to rebalance into it. Now I'm pretty I have some discretion with my stop loss placement. So like with trades like this where there's a huge wick to the downside, because this was happening a lot during the summer.
Mm.
I'll just instead of putting my stop all the way like at the low here or this low, I'm gonna put
Mm.
my stop right at the wick low, because if price comes all the way back down and breaks this, it's probably gonna come and just take this low out. Like there's no point in me in
Mm.
extending the risk or opening up the risk even more. So I just
Mm.
leave it alone. I just put the stop here, and any of this is just it's just some it's
Would have been more. Yeah.
yeah, right. So um yeah, so that's the type
Nah.
B setup. That's like my most profitable setup. I'm not gonna lie, it's probably my most profitable setup. And then my type C setup is basically I look for divergences, or I don't know if you've heard them called like SMTs.
I see. I don't. I was gonna ask you. I don't really know too much about that.
Oh,
Like,
okay.
and I don't even know what that stands for.
Bro, it's because it's stupid, bro. So SMT means smart money technique, but it's so fucking dumb because people that trade like ICT concepts that like swear by it, they call it a
So
SMT, but all it is a divergence.
what's a divergence?
So let me explain that real quick. So a
So is it
divergence,
like okay?
no, go ahead. What were you gonna say?
I was gonna say like S&P and Nasdaq that they move in the same flow.
Yeah, so they usually move correlated, right?
Yeah.
But when there's a discorrelation, meaning say NQ makes a lower low, but ES makes a higher low, that
Yeah.
mean that is a bullish divergence. It's a divergence of the lows. That means the lows are discorrelated. So let me like kind of draw it out.
Mm.
So let's say this is NQ, right? Um, yeah, let's say this is NQ, or I'll just leave this here. And then let's say this is ES or SPY or whatever you want to call it.
Yeah.
Let's say this is what we're looking at, right? So usually these indexes move in a correlated fashion, like you said, right? Like you already know.
Yeah. Yeah.
But in this case, we're seeing a discorrelation between lows on price. When I say discorrelation, I'm looking at this low and this low.
Mm.
We have a higher low, lower high, lower low. Whereas with ES, we have a higher low, lower high, higher low again. So
Mm.
you can see it's a discorrelation between the lows. Now that is a bullish divergence.
So it would be a bullish divergence. So let's say you trade in Nasdaq, right?
Uh-huh.
And you see ES go up, but Nasdaq is going down. That's bullish divergence, right?
But not necessarily it's going down. It's where the lows have formed. So it may be going down, but you look at the lows. So
Okay.
In this case, we're still uptrending because let's say on the four, they say this is on the 1 hour time frame, right? But
Yeah.
on the 4 hour time frame, this is all just noise. On the 4 hour time frame, we're still trending upwards, right?
Yeah.
So it's not about it's going down. It's more about where the lows have formed
Mm.
and what lows have been taken out. So you know how when we were looking at like the type B setup, you know this. You talked about this before. We looked to see a low
Yeah.
get swept.
Yeah.
So the low was swept here on NQ, but not on ES. And I leave them blue if they haven't been swept. So that's the difference. Usually, I love taking a type B setup when both lows are swept on ES and NQ because then at that point I can just I can take off my second chart and just focus on this one, right? Because once both lows have been swept, I'm looking for just a break to the upside on the lower time frames with an imbalance that I take a position off of once it goes back into it. But with a type C setup, the key for me that has been in, me trading this somewhat profitably is paying attention to the lows. In this case, because we're looking to go bullish, right? So
Yeah.
usually when this happens, there's going to be an imbalance somewhere to the downside that price needs to respect. So if price, say like we have the divergence, there's an imbalance. Price is somewhat going to show respect to it, right? It's going to do some of this. It might not move for a little while. But then we want to see a break to the upside for a type C setup. Take this here. It would be the same thing on ES.
So would you enter off it breaking, or you're gonna wait for it to come back in?
So it really depends. Sometimes I wait for so if let's say price breaks above and closes right here, right? Where this arrows, I'll enter here because I'm willing.
You enter like immediately.
Yeah, I'll enter immediately. But the thing is, only when price is somewhat close to the imbalance that it broke.
Mm-hmm.
Now, I've gotten burnt with that. Not with this, but when price closes up here, right, when it breaks it, right? Say the candle closes here.
Yeah.
Now my margin of error, not my margin of error, my potential downside is a lot larger.
Yeah.
Because it closed so far away, where it's highly likely that we're going to get a pullback into it before going to the upside.
Gotcha.
So I've learned that over time. Like, it wasn't until like August I really started paying attention to that. Where price sometimes where price will break to the upside here, and then I enter all the way up here, maybe targeting a 1 to 2, and then price will come back down, and I'm like in drawdown, but it comes back down right around the area, but also there might be an imbalance within here on the way to the upside that price might have created. So say there's an imbalance here. Now we have two imbalances stacked on top of each other that I could take advantage of in some way, where instead of my entry being here, my entry can be somewhat here or here. Minimize the risk. I can even minimize the reward, still looking for a 1 to 2, where in this case a 1 to 2 and with this type of position is so much more likely to happen than with the previous way of looking at it right here. So like I'm more likely to get stopped out or more likely to experience drawdown with this type of entry than I am with this type of entry.
Yeah.
So that's like the type C entry, but a lot of times, like I said, there will be like you're totally right. Like, and the fact that you caught that like as new as you are to trading is very good. I'm not gonna lie. Because for me, I didn't start waiting until price would come back into this area, maybe until about a month ago, and I've been trading futures since like June 1st.
Yeah.
So, I would say like this is the type C entry where I just and I don't even wait for the candle to close on the pullback. I just wait for it to come back into it. If it's live, and then it taps in, and then I enter.
yeah.
So that's the type C entry. So whenever I say type B, you know what I mean now. Whenever I say type C, you know what I mean now.
Yeah.
Um,
Yeah. Yes,
so,
sir.
but yeah, type B is like the most I've had, like the most I've had the most experience with that type of setup. I feel the most comfortable taking that setup because the thing is with the type C entries, they can be like your window of opportunity for entering is so like short. Like it's not you don't have like minutes to enter. Like whereas like with the type C entry you have seconds. Like if you wait for
That's what I'm
five
saying. Yeah.
seconds, you might miss out on the trade. That's what happened
That's
to
yeah.
me twice. Not last week, but the week before last. It happened to me 2 days in a row where I was
Damn.
like too nervous still to enter. I wasn't mentally prepared. And then Price goes for a beautiful 1-2 on me 2 times in a row.
Exactly. Yeah. That's
So
how happened to me last week.
yeah. So I would say that's so yeah, so this is my type C entry. I don't like it as much. This is a pretty clean explanation of it. So if you look, alrighty. So all right. So I wish I should have did a better job of drawing the divergence on here. But this is on the high. So this is like an example for when you're trying to go short. So on the 1 hour time frame, there's a bearish divergence because it's a divergence on the highs of the market. Where we have a lower high created on NQ but a higher high created on ES. Whereas this is the high that we're starting from, right? This is the lower high. This is the high we're starting from on ES. This is the higher high. Once that gets formed and that prints on the 1 hour time frame, I'm then willing to go to the lower time frames to look for an imbalance during my session to get broken and then I enter. So in this case, this was one of the instances where I entered right at the break here. There's some spread or whatever, but I entered right at the break. I used to put my stops right above the candle that broke the imbalance, but now I put them at the high, just to give myself more room, more protection. And then as you can see, it flowed to the downside pretty smoothly. But this was one of the cases where it makes sense to enter right at the break because there isn't much of an imbalance for price to fill. Like it's this small spread here. If price wants to fill that, so be it. I'll still take the entry here. If I take the entry here and I'm in drawdown for a little bit, who really cares as long as it's still in my plan? Now, if the breaker candle closed here and we have a huge imbalance here, yeah, it makes more sense for me to wait to just see price tap into the area and then for me to take the short and then continue to the downside. But yeah, that's an example like me trying to go short.
Feel you.
No, go ahead.
No, I feel you. Hell yeah.
Okay, yeah. So yeah. Yeah, so Monday was good. Tuesday was let me show this to you actually, if anything. So like Tuesday was one of those days where like, you hesitate for a little too long and then, you end up missing the move. So like, and it wasn't very clear to me. I'm not mad I didn't take this position. I've never really seen this before. We have a bullish divergence on the 1 hour time frame here.
Yeah.
Between ES and NQ. Go to the lower time frames. I'm looking for structure to be built and then an imbalance to get broken. So I'll see the 5-minute imbalance right here. And that price had already respected it earlier in the morning, right around 9 a.m. This is the trade. I remember you and I were both looking at a trade like right around 9:30, but we both don't like to enter right at 9:30. So this was on Tuesday. So price broke above. This was the 9:30 candle. This hammer right here, this bullish candle right here.
Yeah.
This was the 9:30 candle. I didn't want to enter off of it because like it closed. This was really the 9:25 candle. It closed at 9:30. There was this imbalance here that needed to get filled, right? Tiny imbalance. Price was very erratic upon market open. Came and wicked to both sides. Now I'm looking at this like hell no, I don't want to take anything here. But looking back at it, this is pretty clean. Like, I could have taken this stops at the low, targeting a 1 to 2. Even if you don't want to target a 1 to 2, you could target this high. You could target different highs.
Yeah.
The trade would have worked out in your favor. So this is just another, like, this was one example. Like, I'm sitting there looking at it and I'm like, this isn't clean. But then after the session, I go back and review and I'm like, damn, like, I really could have caught that if I was just open to taking the risk when the market was moving erratically. But it is what it is. And that doesn't mean that every single time I take it, it's going to work. I just have to be willing to take the risk and then kind of track the results, track my decision making, see if it's something I should keep in the trading plan or whatnot. But, so yeah, just wrote that note there for me, for myself. This was Wednesday, the trade that I took, like, not even really, I had gotten off the charts. I was walking to class. You had sent a message that price reached our area of interest, that, like, that 397 level or whatever. And bro, I didn't even look at it. Like, I literally stopped walking, opened my backpack, pulled my computer out, was walking to class with my computer in my hand, and I just pressed buy right as I connected to the Wi-Fi. Like, I didn't even really analyze. Like, it was a bad position. I didn't even get filled here, really. I got filled, like, somewhere up here, so it increased my risk, where I wasn't risking, like, a 1 to 2. I was looking at more like a 1 to 1.5. And that definitely messed me up for, like, the rest of the week. I allowed it to mess me up for the rest of the week. Like, I went into profit initially, like, with this candle, but then it just dumped. It didn't even reach a 1 to 1. So, like, let's say, you know, I had been still sitting down in the library when this trade position or this trade opportunity took place and I took it here. I still would have lost, but I wouldn't have been mad at myself for taking the position. Like, this, in the way that I took the position was very erratic. It wasn't smart. So just got to get better from that. And then, shoot. Thursday was like the last day that I took a trade. Basically the same shit that happened Wednesday. Really the same thing that happened Wednesday.
Yeah, it was just McDonald's signs, bro.
Yeah, right, yeah, facts. Yeah, same shit that happened Wednesday. Like, but the thing is, I kind of forced it as well because I see, like, okay, price breaks to the upside. This is a type B setup, so, but it wasn't very clean. We have a divergence. The divergence gets broken as this low gets, you know, taken on the 1 minute time frame. So once this low gets broken, the divergence is basically obsolete. It doesn't matter anymore. Because that means it's not the protected low. Like, this was supposed to stay protected, meaning this low that happened wasn't supposed to happen. Price should have just continued to the upside. But it is what it, like, I'm not mad at it, but like, looking at it, it turned from a type C to a type B setup. I'm looking for a break of structure to the upside with an imbalance, which happened right here, and looking to see price come into it. Now, this was like the first entry opportunity. I didn't take it because all this wick to the upside, I didn't like it. I'm kind of glad I didn't take it. But then price comes back into the zone, gives me a stronger bullish engulfing. I'm thinking this is the move. Price ends up just taking me out. So in this scenario, I think that it was just, it's right near 12. I don't really like to. I don't really trade. I never really trade after 12. I haven't traded after 12 in a long time. And then it was just choppy. Like, really looking back at, like, this wasn't the cleanest setup. This was a lot of just consolidation. Me hoping to just see a breakout is somewhat irresponsible. It would have been smarter for me to look for an actual break on the 15-minute and then see if there are any lows that price had created that could come and be taken out, say, right around here, to then continue to the upside. So that was Thursday. But then also at the same time, we weren't even in an uptrend. So this was a counter trend trade. That's kind of really where I went wrong. This was my chart. My chart was messy as hell. I'm gonna have positions all the way from the 21st up until this point. And I have all these drawings. I'm thinking that, oh, like, on the 4 hour, we're in a downtrend, but I'm not seeing it because I have all this shit drawn here where I don't see that this low got broken. This low, this candle closed under this range. So we're in a downtrend now. I should be looking for short moves, if anything. I should only be open to short moves if the 1 hour is also trending downwards. So the 4 hours trending downwards, but the 1 hour is trending upwards at the beginning of the day. So we're in a state of confusion. At least I am. I should have been, because this is the 1 hour high. Wicked it. Price breaks above, closes above. We continue to the upside. I'm looking to see this 1 hour low get swept and then continue to the upside, but we're in a 4 hour downtrend. So 1 hour and the 4 hour are not in alignment. I don't need to be taking anything today. I shouldn't, not today, that day. I shouldn't have been taking anything on Thursday. I should have just let the market breathe. But I was being biased. I had woken up late. I was out like the previous night with my friends. So I was just being dumb. Woke up late, rushed to work. Sat down, like didn't really do analysis, just looked at what was already on my chart and just took it for what it was and then just wanted to go long. Where in this case it didn't go in my favor and it shouldn't have. So that was Thursday. Friday didn't take anything. There was nothing for me Friday. You and I both were looking to see price pull back around like 10 to 11 a.m. That shit did not happen.
Yeah,
Price just stayed right around this area. So
it just kept going and going and going. Right. And just stayed up there.
Yeah, it just left us. So I'm not mad at that, but I would say a pretty uneventful way to end the week. But yeah, that's really everything this past week. Don't trade while walking to different places. That's pretty self-explanatory. I shouldn't have done that shit. Do full analysis of the market. But
what's it called? I tried out a funded account because I had a discount code for Apex. And what's it called? This is before I even put like stop limits, like take profit, stop losses. Bro, I hit buy. I was going for a long. I hit buy, and then as I was walking the dogs, bro, and I lost internet, and I blew the account.
Damn! Wait, last week?
Nah, not last week. This was like last month. I just wanted to try it out, and then I was like, bro, what? Yeah, that was crazy.
Bro, it's okay, bro. You know how many I feel so many funded account things, bro. I'm not even lying to you.
It'd be like that. I'm gonna just wait until I'm more experienced and then probably try another one.
Yeah, I mean, I would say like first of all, like don't sweat it. People usually think that like what do you call it? Like fun. Like if you fail a funded, that means like you're not gonna be profitable. Like you're a bad trader. Like that's actually not true, bro. Fundeds, they have very tight parameters. Like if you fail a funded account, that just means that you lost 10% or 8%, whatever it is now. Like people lose 8%. I'm gonna be real. People lose 8% in a day, whereas like with a funded, you can only lose 8% in a month. I'm not saying losing 8% in a day is good. It's definitely not. But it's just like people take losing a funded and be like, "Oh, I'm a terrible trader. Like, I can't do this shit."
I was a trader. I was like, damn, whatever. Nah, but what's it called? I don't know if I want to go back to Apex or go to something else. I don't know.
Yeah,
I don't know where to go.
I mean, I think I'm going with Top Tier Trader. That's
I never heard of them.
So Top Tier, they're owned by two traders actually. Like so I know who the owners are and they've never really had bad reviews. I'm
looking at Top Step, My Futures, Funded, and then Apex.
Yeah, I haven't looked to go into any futures trading like firms. It's only been like Forex ones because the pay structure in my opinion is better. Whereas like with like a futures, some of them you can only get 50% of like the payout.
I think Apex. Apex is you keep the first 25K you make, and then it's a 90-10. But that's the only one
really?
I know.
Then I'll be interested in that for sure.
I was watching hella videos. Even though the website is kind of janky, they pay out, but you have to be like really strict on the rules, or they won't pay you out.
Yeah. So, yeah. I mean, we gonna figure that shit out.
Yeah.
Yeah, I'm trying to get like 400 with what's it called? With top tier by next December. I'm on track to be able to do that. Just like gotta turn like my mindset off of like how much can I make like this week or today, or like to like more like, okay, what's my percentage like this month? Can I replicate that for next month? Not really look at the money amount too much. Look more at the percentage amount. Because like I was talking about with like one of the other calls from like a few weeks ago, one of like the first calls I did, like 4% on 100K is 4K, but 4% on 400K is 16K. And if I can do 4% in a week, then I don't need to trade for the rest of the month. Or if I trade for the rest of the month, I can lower my risk.
So do you have to make the 4% on the funded account and then get paid out that?
Yeah, so like when you pass the evaluations, right, or the challenge, you get the account, you get the credentials for the account, then you trade the account. With top tier trade, you get a 90-10 profit split. So you got to keep 90% of the profits.
Pretty sure, yeah.
And like my deal with that is to be doing anywhere between 2 and 4% a month, which I know I can do. Like not last week, but the week before. Not last week, but the week before, I did 4% in a week. I've done more than that in a week, but as far as me trading futures and me tracking it, like that's the best I've done. With trying to look at it from a funded trading perspective, because with my let me go to not my live locker. So on my demo Trade Locker account, because Top Tier Trader uses Trade Locker. So I've been practicing on here. What I can do is, if I want to risk 1%, 1% of 100K is 1K. So I just put 1,000. Come on. What's going? Oh shoot, 1,000. And then say like we're looking on the 5-minute time frame, and I want to put, and my stop's gonna be here. I can just press buy, and price will fill me here with whatever lot size is necessary for me to have a 1% stop loss or 1% risk. And then I just do that. Now this past week was rough. Took larger than a 1% loss on like that one trade I told you that I entered on Wednesday. Then took another loss. So I'm now back at 1.5% in profit. But it is what it is. I'm not really looking at this like me trying to go, like this is a demo account. I'm not pressed about it. It's not like it's not my funded account. But I'm just like tracking my progress to see like, okay, if I follow my system, what does my P&L look like? If I follow my system, what does my win rate look like? Like on this account, let's see. So every trade. So 1, 2, 3 out of 1, 2, 3, 4, 5, 6, 7. So 7 trades have been taken. One of them was somewhat of a break-even trade. So let's say I have around a 50% win rate. So let's exclude this one because this was taken and it was a break-even trade. So 1, 2, 3 wins, 1, 2, 3 losses. I have a 50% win rate on the account, and I'm up 1.5%, which in my opinion is pretty good. I mean, obviously I want to do better. This trade was not supposed to happen. Like I said, this trade was not supposed to happen. Like I entered that shit too late with too much risk. Like, I really should be up damn near 2% right now. I should be up over 2%. This should have been a $1,000 loss. At most $1,100. Like, I should be up over 2% right now, like 2.2%. But it is what it is. Like that's what will happen with the funded account. If I'm not careful, I'll risk more than I'm supposed to, and I'll be in a position like this again. So,
Yeah.
a learning lesson. But yeah. So I plan on getting the first account by January 1st.
How much is each account?
Like 800. Like it depends on what like settings you look to get for it. Let me pull them up.
That's crazy.
So like, what the fuck is this?
Top
tier trader. All right, so let's say you want to get 100K, start a 100K challenge. The reason I say the price differs because you can get different settings on it. So like,
yeah,
let's say, so I get a discount code because I have an account with Vital Markets. So when I was trading like Forex and my personal account in there, I was living off my trading at one point, and I had like a Vital Markets as a partnership with Top Tier Trader. So they gave me like a discount code. So I guess I'll pay like, $650, $660 for this type of account. So 90-10 profit split, reduce profit target to 8%, which is honestly good because then you only, if I'm taking 1 to 2s, I only have to win 4 trades in a row. Let's say, if I'm starting at break even. Yeah. Double leverage means you can risk double the amount. I don't really need that. I don't need double leverage. A 1 to 100 is totally enough for me. Weekend trading, holding, I don't need that because I don't hold through the weekends anyway. Damn, that should just keep going down. Express payout, I probably want that. I'm not gonna lie.
Yeah, low-key, yeah.
News trading, I want that. No minimum trading days. We right around $800. So like, well, no. No minimum trading days. That doesn't make sense because for me, I don't. So minimum trading days is 4 days. I don't need that because it's gonna take me more than 4 days to make 8%. It's gonna take me at least 4 days to make 8%. Is basically what I'm trying to say. Because if I'm risking 1% per trade, and I have one winning trade per day, that means the most I can make is 2%. If I'm capping my reward at a 1 to 2.
Yeah.
So I can only make 2K. I need to make 8K. It'll take me at least 4 days, so I don't need that. News trading, I need that honestly because I don't want to get caught up in like breaking some rule for that. Express payout, I don't know like what they're. Oh shit. Okay, so they're leverage. I might need to do the double leverage. Yeah, because I need a 1 to 100. Not I need it, but I would prefer to have it. So I'll be paying around $800, damn near $760 to $800. If it wasn't for that, then I would be what do you call it? It would be right around what plus 200, damn near $1,000.
Damn.
Damn near $1,000 for one account. Yeah, it's 948.10. So, I could buy it now, but I'm trying to look at this like instead of just because if I buy it now, then the money that I have saved, like that's depleted. Like that's depleted. I don't want to. I've put myself in situations where like I put all my money into trading, and then it's like, okay, no, now it has to work. Like especially as a college student. I mean, I'm not really in that position now because I have a job right now, but like I don't want to put myself back in that mindset. Like I remember what that felt like. Like, oh, like I'm on my last like $1,000. Like if trading doesn't work out, all I have is $1,000 left to my name. Like I don't want to be in that mindset, I would say. So like it puts more pressure on me. I do a better job when I have like, money behind me, behind the decisions that I make. But yeah. So,
where you work at again?
I work at the bank. I work at SECU, yeah.
What bank you work at?
SECU.
Oh, okay. Credit union?
You said what?
The credit union?
Yeah, the credit union.
Yeah. Okay.
Yeah. It's a calm job. I like it. Like they let me like, bro. I trade in there like while I'm at work.
Oh damn, hell yeah.
Yeah, like I do my homework in there and everything. Like it really.
Are you a bank though, or like?
So I work at like the front desk. I can do everything that doesn't involve cash transactions. So I write, cashier's checks. I write regular checks. I take checks. I can really do anything.
Oh yeah.
So
damn.
Yes, it's calm. I don't mind it at all. I like it, but yeah, it's a good job. So yeah, I would say like this is top tier. It's a bit different. Like with top tier, so I would be trading NAS 100.
Mm-hmm.
I'll be trading NAS 100, whereas like with us like on Tradevate we're trading NQ, which is the same thing, but just on different markets. So yeah, and then also with them, I don't know if the futures prop firms do this, but you get a refund after you pass.
That's crazy. That's
so good. It's like let's say you pass, right? Let's say I pay fucking $1,000 for this account. I get a refund once I get my first payout. So once you get the account, you have to like make at least some money on the account. Let's say 0.5% to 1% on the account. And then you can get, your, say like I make $1,000, right? So I make 1%, I get $900 of that, plus my $1,000 that I paid to get the challenge.
Mm-hmm.
So now it's all profit. Now everything is profit. I'm not like in like any deficit at all. Yeah. So they that's one thing I like about them. A lot of prop firms do a good amount of prop. I'm not gonna say a lot of them. Some of like the more reputable ones do this because the thing is like the chances of passing is like really slim. It's like 3% pass the first phase, and then like 30% of those 3% like pass the second phase or some shit like that. So it's like that's like saying like out of 100 people, only 3 people pass the first phase, like this first phase here.
That's crazy.
And then only 1 passed the second phase.
That's crazy.
So like let's say 100 people pay $1,000. That's $100,000. Then 3 people pass the first phase. So that means the company's basically down 3. They have to basically possibly pay back $3,000. Then only 1 out of those 3 people pass. That company. And then let's say this person that passes the second phase, that one person, say they don't get a payout, say they blow the account, then that company gets the full $100,000. But if that company gets, say like that trader makes a payout, then that company keeps $99,000.
That's crazy.
So either way, they're good, like they're up. So that's the reason I do like them doing the refund.
Yeah.
Yeah. So. Yeah, bro. We 2025 gonna be the year. It's gonna be the year.
Yeah, hopefully, man. Hopefully.
Yeah. I'm confident in it, bro. We like calls like this, it's gonna get us right. Talking about different things and whatnot. You want to share your screen? Is there anything that?
Oh no, I ain't got nothing on my screen right now.
Oh, okay, bet. But yes, you? Is this your first time looking at the charts for this upcoming week?
Yeah.
Oh, okay, bet. But yeah, I mean, let me ask for your feedback on the Discord. Is there anything what you think of it? Do you have any ideas as to anything that you would like to see added that would make it a better environment?
Not really. You got the news, you got everything. Everything's pretty straight, honestly. Nothing too bad. Everything is.
I appreciate the honesty.
Everything's great.
You've definitely been a very active, probably the most active member behind, like, right with, me, Fahad, Ryan.
Oh, I'm lit. I'm in that.
Yeah, so definitely appreciate it.
For sure, bro. For sure. I'm like, damn, I'm tapped in. I'm trying to get it right. I'm trying to get it in.
No, facts. Same here, bro.
I'm trying to get Kingston in it, but, He only pull up when we trade.
Oh, okay. Yeah, no, yeah.
He busy.
Yeah, no, I get it. Man, we all adults, bro. We all got shit going on.
Chilling, man. No, but tomorrow 9:30, we in here.
Yeah, no, facts. Yeah, I'll be live with y'all tomorrow because I don't have work.
Yeah.
I'll just be at school, so I'll be chilling. I'll be in there with you guys. Make it a good session. Follow our rules and whatnot.
So that's the days.
You said what?
I'm looking at the part right now.
Let me actually look at Forex Factory, see what news we have.
I'm about to say, hell yeah.
Tomorrow we got nothing. Tuesday we got Jolt's jobs opening. Sometimes that does some shit, sometimes it doesn't. 30th. Wednesday might cook up. I'm not gonna lie. Wednesday and Thursday going definitely cook. Thursday's definitely gonna cook up.
Yeah, Thursday crazy. It's always be the Thursdays.
Mm-hmm. Yeah, Friday's gonna be hectic too because we got not NFP but non-farm employment, and that always moves the market a bit. And we have unemployment. Damn, we got a lot of news this week. Monday and Tuesday really gonna be chill days. That might be good for us.
Yeah, because I know some news be good.
Yeah, sometimes it'll accelerate the market's movements, which sometimes helps in the slower environment. Like this past week was definitely slower.
Needed that.
As far as following actual market trend, I feel like this past week was much of a pullback week.
Yeah.
Whereas now we might actually be expanding to the upside, because tomorrow I'm definitely going into the market looking to go bullish. As of right now, because on the 4 hour, I really drew my charts and everything like that before the call. Updated everything. Yeah. If you look on if you look on the daily, let me go to the weekly. On the weekly, we are still. You've identified this imbalance from July.
Oh yeah, hell yeah.
But I have it marked on the daily time frame to just be a bit more precise. Price is operating within that, but we're now looking to possibly break above it. If you look on the 4 hour time frame, this is where I got caught up last week. I got caught up here, took a loss here, and then took a loss here. Last week. This week we've actually broken to the upside, 4 hour high that we broke to the upside. We're following the trend of the higher time frame now, and then if you look on the 1 hour time frame, now we're in correlation with that, where we broke to the upside again. Price pulled back into this imbalance that we were looking to see it pull back into last Friday. Mm-hmm. It happened around 2 p.m. Neither of us are going to take a fucking trade at 2 p.m. on a Friday. So, price moved up, but possibly for tomorrow, price may come back and fill this imbalance. Not an imbalance, but this gap. And we may get a move. Either price comes into here, gives us internal structure, takes the low, right? So say it comes into here. That's one option. Price comes and takes the low, which I would actually like a lot more. Just sweeps the low, gives us structure to enter off of. Or with the whole divergences. 1 hour on ES. Let's say these are the same lows, right? Aligning time with price. Say NQ comes and takes the low, and then ES doesn't. That would be a bullish divergence. Let's say ES just comes down here and takes it here. You see what I'm saying? Mm-hmm. So that would be a bullish divergence. But I don't really have the past few weeks. I've just been super scared taking those divergence type of entries. So got to be better with it. Got to be prepared for it tomorrow if it happens. But ideally, I would just like to see us come back and fill this, give us some internal structure, and then possibly go back long as of right now. So we'll see what happens.
Yeah. We shall see. I like that imbalance. I like that missing spot. So I just want to see what it does off that.
Yeah. Nah, same here. Same here, bro.
Lit.
Yeah. But man, thanks for joining, bro. Appreciate you.
Yeah, for sure, bro. I'm always trying to join whenever I can.
Yeah, no, for sure. For sure. Thank you, bro.
Yes, sir.
We gonna wrap in the morning.
I got you. I'll see you tomorrow morning at 9:30.
Yes, sir. Have a good night, brother.
So you too, man.
Yo, what's good, Nard?
Bro.
Yo, what's good?
You know, I was just listening. I was eating, but I'm gonna do my analysis in the morning
Okay, bet.
for looking at the market.